What's going on? I'm Marcus. You're at the channel The Debt Free Dad, where we're following my journey to financial freedom and learning about finance. In today's video, we're going to talk about something that I don't know. I really haven't seen a lot of videos out there, well, maybe not a lot from the finance folks I watch, but it's two things that if you hold on to them too long, they could be extremely detrimental to your financial health. Relationships and stocks. It's true though. It's true. So today's video we're going to talk about when should you sell a stock, what factors to consider uh, before you make that determination of if you're going to sell your stock. As always, I'm a licensed attorney, but I'm not your attorney. So if you're looking for financial advice, go somewhere else. If you're looking for legal advice, go somewhere else, because that's not what this about. I'm just letting y'all know what's going on in the household of the debt-free dad. So talking about when to sell your stocks. Essentially, there have been studies out there. I don't know if y'all remember back in the day when you was taking a multiple choice test and one of your teachers told you, whatever your first choice is, go with it. Don't erase your answer. Well, interestingly enough, there's been studies out there that shown if a person invests in stock A and later sell stock A to purchase stock B, over a 10-year period, stock A normally performs better than stock B. So I thought that was just a creative, interesting data point. Now, I'll tell you my general advice for investing. This is what I do for investing. I like to invest the easy way. I don't have a lot of single stocks. All the single stocks that I have, I show you all when we do the investment challenge update and all that good stuff. I'm more of a fun guy. I like the 401ks to maximize my wealth. I like the IRAs. I like ETFs. I like things that are easy that I could put on autopilot that's going to generate me an easy return. So selling this stock really would pertain more to those single stocks or if you're invested in crypto. All right. So the first thing you got to know is most investors do not beat the returns of the S&P 500. Typically, the market averages about a 10% return, and if you go get a financial advisor, their numbers are actually under that return. Hence the reason why I like to invest in funds that track either certain arenas like financial or tech, or funds that track an actual index in and of itself, like the S&P 500 or the NASDAQ or what have you. So with that being said, I think ETFs are king. I think 401ks and Roth IRAs are king. And like I said, this really applies more to single stocks or if you're looking at crypto. And I keep glancing over because I got to follow my notes because you know me, I just get out of pocket and keep flapping my gums. All right. So now we're going to talk about like what are some of the factors that come into play when you're making a determination. But before we dive into that, let's take a look at what some of the experts say. The investing guru I always like to look at is Warren Buffett, Charlie Munger. And Warren Buffett's view is actually interesting because it's one that has evolved over the years. When I did some research early on, Warren Buffett's saying was you sell a stock when there's a better opportunity to buy. Now, if you're not familiar, Warren Buffett's view is stocks should be bought with long-term thinking in mind. So his general rule and a quote that he have that I wrote down here, it says, let's see. If you're not willing to hold the stock for 10 years, you shouldn't hold it for 10 days. So again, he has a real long-term view of stocks because the stocks grow, the market grows over time. You get all that good compounding interest. Now, that being said, I'm not challenging the validity of an investment guru like Warren Buffett, but I do think that far as me and my investment strategy is a little bit different. He's in a completely different ballpark from someone like me. So what I'm talking about is kind of my view and some of the things I consider if I'm selling a stock or want to move an asset. So the first thing is your financial situation. If I'm investing in single stocks and crypto, but I still have unsecured debt or debt like a car loan or credit cards, that's I have is a completely different strategy on when I should sell in that particular instance. The next, I guess, stage that it could be a factor in determining when you should sell is if you don't have any unsecured debt. So you don't have any credit cards and you don't have car loans. I'm gonna throw car loans in there as well. But you maybe just have a mortgage and student loan. And I guess that last class is if you're just debt free or the only debt that you have is your mortgage. And so essentially, when you're selling a stock, from the most fundamental basic concept, you got a few options. You can either sell when your stock has went up and take some profits. You can sell when the stock is dropping and you don't want to lose any more money, or the stock could be trading sideways. That means you bought it at 40 and it's just trading at 40, 40, 40, 40. It's been trading at 40 for 6 months. And so you want to just get out of it and potentially find a new play. Um, I guess here is kind of some of the things I consider. One, you have to look at your financial situation. So if I still have debt, if I still have credit card debt, me personally, I'm not going to be a strong fan of investing in single stocks. I'll still invest in ETFs and things like that, 401k, IRA. I wouldn't be a fan of investing in single stock if I did have unsecured debt. And the only reason is because if I have a stock or ETF or something like that, and I'm putting money in it and it's on autopilot, and I know it's going to generate a 7 to 10% return every year, I'm less likely to be obsessed with that stock going down. If I'm overwhelmed or over leveraged by debt and I take $600 over a 6 month period and I invested in stock A, and if stock A goes from $100 a share to $70 a share, that shit gonna hurt me. It's gonna hurt me to look at it. I'm gonna already start thinking of an escape plan. And so you have to determine what your financial situation is and what your risk, I mean, what level of risk are you willing to take? One of the things that I consider is if I'm new to investing, when I was new to investing and I had single stocks, and trust me, I've actually had a stock before and I held on to it too long and I woke up and that shit was non existent. It was at zero. So, hey, learn from trial and error. That was like one of the very first few investments that I ever did, and it was terrible. But one of the things that I consider is, when is the appropriate time to take profits? If I'm new to investing and I'm investing in single stock and I still have debt that I'm trying to take over, um, it's a few things. One, is this a company that I actually believe in? If it's a company I actually believe in, that's more benefit for you to invest in that company, and it's more of a reason that you'll hold long term. For example, if you're invested in Tesla and you see Tesla goes down 20%, because you believe in that company, you aren't going to get shook and be like, let me sell my Tesla. Because you believe in that company, you're more prone to buy those dips. When that price go down, you'll think, man, Tesla went down 20%. This is a huge sale because I know it's going to go back up. So you're more inclined to buy. So that's one of the first things. You have to understand what your level of risk is, and you have to understand if this stock that you're holding something that you're willing to hold on long term. If you're willing to hold on to it long term, you're more inclined to buy when the stock goes down so you can make money when that stock goes up. That's point number one. I think the second thing is, if I'm a new investor and I do still have debt, I have to understand and know, when is it the appropriate time for me to take profits. Now, I'll use this AMC stock that I have as an example. And I don't even have it up in front of me. I'll probably put a screenshot up, but I'm just going to kind of talk through it. You can see from the screenshot that's on the screen, I think my average buy-in price was somewhere around $14 per share. I think currently it's probably trading at between $39 to $40 and some change the last time I checked. Again, I'm just going off the top of my head, but I will put the screenshot on the screen. Now, if I had credit card debt, student loans, and I made a play in a stock like this. Now, I'm not saying make a play in AMC. That's not financial advice. I'm just using this as an example because AMC is a risky stock, and I wouldn't recommend any new investors taking that risk unless you're absolutely cool with potentially losing everything. Now, back to what I was saying. In this particular situation, if my average buy-in price was $14 per share and I have $89 per share, I would probably have taken profits once this stock allowed me to take out my initial investment. So, for example, a general example, if I had 10 shares of a stock that costs $100 a share. That would be $1,000 worth of $1,000 worth of stock in this company. If that stock actually went up to $200 a share. So now my $1,000 is worth $2,000. At that point, I would probably take that initial $1,000 investment out to get me back to where I started, and then just let the rest ride out if I want to. Uh, if I have faith in the company, want to leave it in the company, and want to see and think that there can be continued growth. Now, on the flip side, a lot of people probably wondering, when would you even sell this AMC stock? Well, under a certain circumstance, because I know that AMC is a volatile play, but typically what I do is if it's a single stock and it's something that I believe in and I wouldn't mind holding for 10 years or so, I would probably just hold on to that stock because I believe in the company. I believe in the numbers behind the company, and the numbers support me holding on to it. However, everyone's not comfortable doing that. So sometimes what I do, and again, there's a lot of things you have to consider, whether this is a long-term play, whether I'm just trying to get in and out for a few weeks or for a month or two to make a quick profit. But depending on those things, sometimes I would give myself a cutoff point. Well, again, let's go back to the example of 10 shares of company A at $100, $1,000 worth of investment in this company. If the stock goes up, great, everybody's happy. But if that stock goes down, a lot of times what I'll do is give myself a cutoff point to say, hey, if I lose 20% or 15% of my initial investment, I'm willing to move on and move out and do something else. And a lot of you guys out there who are using these Webull and M1 Finance and all these brokerages, you can actually set up your account to sell a stock when it reaches a certain price, or to sell a stock when it drops to a certain price. This is a way to make sure you can take a certain amount of profits if it goes up, and also a way to make sure if the stock goes down, you don't get burned too bad. Hey, let me bail out, because a lot of people want to ride a stock. They'll say AMC to the moon, and most people will ride a rocket ship to the moon and stay on that son of a bitch until it, pardon my language, and stay on that rocket ship until it comes crashing down to earth. So you definitely don't want to be left holding the bag. You want to be able to be in a position to potentially take profits or hold on to a stock because you believe long term this stock is a good company and it's going to have some upward momentum or trajectory. That's just kind of some of the things that you want to break down. The other thing that I think you have to take into play is, when you want to sell a stock, is what is your ultimate goal or ultimate end game? If it's a stock, a single stock that I plan on, well, I'll put it like this: single stocks, I like to invest in them long term, but I do have goals. And if my single stock portfolio reaches a certain amount, I'm actually willing to liquidate all of it to satisfy a financial goal that I want to satisfy. For example, that's something that I'm not going to do with a 401k or IRA, or if I invest and I have it in an ETF or index funds or something to that effect. But let's say over a 5 year period, I'm just on Webull and I'm investing in companies. I got AMC, I got Pfizer, I got all of this stuff, right? And I've been investing for 4 or 5 years. And that portfolio has grown to, let's just throw an example out there, $50,000 over a 5 year period. If the profits from that portfolio reaches amount that'll satisfy another financial goal that I have, I'm actually willing to cut bait with that entire single stock portfolio. Now, everyone doesn't want to do that. That's something that I'm willing to do. A prime example would be, hey, I want to invest in real estate. If my single stock portfolio is doing so well that I've made a sufficient profit that'll allow me to pull out all of that money and use that investment to actually purchase a rental property, something that's going to appreciate in value, that's something that I would actually willing to do. We would be willing to do. So that's one of the other things that you have to consider when you are thinking, should I sell this stock or should I not sell this stock? The bottom line is, invest in things that you know. If you're not comfortable holding it for 5 to 10 years, you probably shouldn't be in it. Don't stretch yourself too thin when you're looking at single stocks. A lot of people, I got 30 different companies in my single stock portfolio. That's crazy. I mean, even the experts like Warren Buffett don't recommend that you are stretched so thin. You want to have a diverse portfolio, but you don't want to have yourself stretched so thin that your portfolio is just kind of all over the place. So me, I typically want to keep it between 7 to 10 companies that I really like, that I'm comfortable with holding long term, to see them grow. Now, sometimes you have investments, and sometimes you have a play. A play is a hustle, is a gamble, is a speculation. AMC is not an investment. It's a play. It's a play. So when it's a play, you have to know how to play the game, know when to stay in, and know when to get out as to not get burned. The cryptocurrency that I talked about a few videos ago, Shiba Inu, that is a play. That's like a it's slightly better than Dogecoin, but I digress. But that's a play. I don't consider that an investment. Now, I may change my mind that, hey, at some point that may turn into an investment, something I'm willing to hold on for 2, 3, 4, 5 years. But right now, that's a play. So anything that I have that I consider a play, I tend to watch more hawkishly, because those are the ones that I'm going to have to go through these factors and determine, do I want to cut my losses? Do I want to take profits? Are my losses too much? I want to sell because I don't want to accrue any more losses. So the bottom line is, just do your due diligence. Remember, investing is long term. Don't watch your investments. Watch your investments, but don't pay attention to them. Okay. A lot of the times when we buy single stocks, when we buy cryptocurrency, when we buy those things, we evaluate the value of that single stock or that crypto on what we paid for it. And that's actually the wrong way to do it. The valuation of that single stock or that cryptocurrency is not what you pay for it. Is actually, what do you anticipate or can project that this particular stock or cryptocurrency will be worth 3 years from now, 5 years from now, 10 years from now. So anything that you're looking at, you can actually do your due diligence and go, and they have a lot of websites out there that'll show predictions going out from the year current to 10 years in the future, so you can get kind of a good foundation of where do some of the experts expect this particular stock to be. The bottom line, the answer is when you should sell your stock is the typical answer that a lawyer would give. It depends. It depends on your long-term goals, your short-term goals. It depends on your current financial situation. It depends if the money invested is money that you are willing to risk. What is your level of risk? Those are all the things you got to consider. I probably didn't even really answer your question, but the whole purpose of this video was to give you some things to think about to help you when you're making that decision. That's it. Hey, as always, I appreciate y'all tuning in. Y'all take care. Be blessed. Have a good weekend. I love y'all. Peace. But if you're looking on the screen, check out the 2 videos that are up on the screen where I'm talking about my financial freedom journey that me and my family are on, and additional videos related to learning about financial content and financial education. And if you haven't, click that circle all the way to the right to subscribe to the channel.